very much for listening or watching this video. Today we will figure out whether Apple is an interesting stock or not. Well, people who know compounding quality know that we always use the same 15 steps to analyze a business, which you can see here. If there is interest, well, let's also make a separate video about these 15 steps, but today we will do the exercise for Apple. Well, first step we will take a look at, do I understand the business model? We will never invest in a company when we don't understand how the company is making money. Well, obviously, we know Apple, it's a big technology company. They create popular devices like the iPhone, the iPad, a Mac computer. So we definitely know how Apple is making money. I'm using an iPhone, I'm recording this video via MacBook Air. So yes, Apple is definitely something we might be interested in. So for the first step, to understand the business model, the short answer is yes. Also here, you can see the revenue split for those interested, and so on and so further. When we look at the geographical split here, we will see that obviously the US is the most important country or segment or geography for Apple, but also obviously Europe is important, Greater China, and so on. And what we also see obviously is that the revenue is gradually increasing, so that's also something we love to see. Well, second step, is management capable? Well, Steve Jobs started Apple, and obviously he's an amazing founder. Unfortunately, he passed away in 2011, and then, well, Tim Cook became the CEO. So Tim Cook is definitely known for his focus on operational efficiency, privacy, and a lot of sustainability. And right now, insiders own 2.3 billion worth of stock, which is a lot. One thing we don't like to see is that recently Warren Buffett trimmed his share. Well, if you ask me, one of the main reasons for that is the high valuation level. We will go into that deeper later in this video. So we also think management is definitely capable. Tim Cook is an amazing CEO. Steve Jobs did an amazing job creating a great culture for Apple. So also, well, Apple passes this test. Does the company have a moat? Do they have a competitive advantage? Well, I think yes, they have. They have a very strong brand name. It's one of the world's most valuable brands in the world. They have a lot of switching costs and scale efficiencies, so it's definitely something that is very interesting. Fourth point, the end market. Well, when we look at the smartphone market, we see that it's currently worth $500 billion. So that's a 5 with 11 zeros behind it. And the end market is expected to grow by 3.6% per year until 2029. Who are some of the main competitors for Apple? Well, Samsung, Google, Microsoft, and so on. But one thing that we also definitely love to see is that AI could provide a lot of opportunities for Apple. If we look at the main risks, well, very competitive industry. Obviously, the CEO, Tim Cook, is really important. Technological disruption is always a risk. You have a lot of regulatory risks. The valuation looks quite rich, and so on and so further. So now we've gone over the first 5 steps. First 5 steps are more qualitative data. Now we are going to dive into the fundamentals. We are going to dive into the quantitative data. First thing we are going to take a look at, well, the balance sheet. We want to invest in companies that are in great financial shape. Well, we can definitely see that Apple is in great financial shape. They have a net cash position, meaning that they have more cash than debt on their balance sheet. They have no goodwill on their balance sheet. So yes, Apple is very healthy. Next step, we are going to take a look at the capital intensity. Does Apple need a lot of capital to operate? Well, the less capital the company needs, the better. When we look at the data for Apple, we see that the capex or the capital expenditures on sales is 2.3%. We want this number to be lower than 5%. So it looks like Apple doesn't need a lot of capital to operate. That is great. 8 point, well, capital allocation. Capital allocation is the most important task of management. So we want to invest in companies that put the capital of shareholders to work at attractive rates of return. One great metric to look into this is via the return on invested capital. And what we see here is that the return on invested capital equals 35%. That's an amazing figure. That's absolutely what we want to see. And what we also love to see is the fact that Apple is consistently buying back shares, creating some value for shareholders. So on this chart, you can see the evolution of the return on equity and the return on invested capital. And as you can see, those numbers look great in general. Going to the profitability, the more profitable business is, the better. Well, Apple has a gross margin of 46% and a profit margin of 26.4%. This means that for every 100 USD in revenue, Apple generates 26 USD in profits. So that's lovely. We want this number to be higher than 10%. And Apple definitely takes this box. So far, Apple scores very well on most metrics. 10th point, stock-based compensation. Well, stock-based compensation is a cost for shareholders. So we want to invest in companies that don't pay too much stock-based compensation to their employees, management, and so on. Well, today we see that stock-based compensation as a percentage of net income is equal to 11.4%. In an ideal world, we would love to have this a bit lower. Then we are going to look into the growth figures. Well, historical growth rates, you see that over the past 10 years, Apple has grown its revenue by 8% per year. And when we talk about the EPS, 15.5% per year. So definitely attractive growth figures here. Outlook, well, when we look at the long-term outlook of analysts, we see that experts expect Apple to grow its EPS by 8.6% per year in the long term. That's okay. In an ideal world, we would love to see this a bit higher, but a growth of roughly 9% per year is definitely attractive. And this is probably the most tricky part, the hardest part for Apple right now, and that's the valuation. We always use three methods to value a company: a comparison of the forward PE with its historical average, an earnings growth model, and then the reverse DCF. Well, in this chart, you can see the forward PE. We see that Apple is currently trading at a forward PE of 30.7 times earnings versus a historical average of 25.6. So this indicates that Apple seems to be trading at rich valuation levels compared to its own average. Second method we use, the earnings growth model. Well, in theory, it's really easy to determine which return you will get as an investor. It's always the EPS growth plus the dividend yield plus or minus the multiple expansion. When you Google for earnings growth model, compounding quality, well, you will find an article where I explained everything about this topic. Well, it helps to determine which return you can expect as an investor. When you do this exercise for Apple, you see that your expected return is 8.9% per year. In an ideal world, we probably would love to have this number a bit higher, but it's okay, I would say. A reverse DCF, same as with the earnings growth model, you can look at an article, How to Value Stocks Like a Professional, freely available on Compounding Quality, where this subject is explained. Well, a reverse DCF basically tells you which growth rate is implied in the stock price, excuse me. So this is getting a bit more technical, but the essence here is that when you want a return of 10% per year as an investor, well, Apple should grow its free cash flow by 16.6% per year. So it seems like Apple, the growth rate implied in the current stock price is quite high. So you can see when we take the consensus of the valuation here that Apple seems to be trading at quite rich valuation levels. Point 14, owners' earnings. Well, in the long term, stock prices always follow the evolution of the owner's earnings. And when we look at the situation for Apple, we see that over the past 10 years, they have grown their intrinsic value by 17% per year. This is an amazing number. This is lovely. So this is definitely a great figure. And then last point we are going to look at, well, when we look at the historical value creation, we see that the stock price of Apple increased by 21.4% per year since 1990. So that's an amazing figure. That's definitely something we love to see. So now, in a very quick way, we've gone over the 15 points, and this is basically a slide that brings everything together. Well, I will link in the description to this URL where you can read the entire investment case. But the key conclusion here is, well, Apple is a lovely business. Apple is a beautiful business, but the company seems to be trading at very rich valuation levels, and that's why I'm not considering buying right now. So this was one of my first videos. Obviously made some mistakes, not too professional yet, but if you like this, well, please give a thumbs up, let me know in the comments. It will hugely encourage me to keep making these videos, keep creating these videos, and make them better and better. And I will talk to you soon.